right here in Chicago down to see me. Larry, are you trying to trade around this event? Is it hopeless? Do we know, what the market wants? Because today I see, pound, a little bit of volatility, but no rally that I think somebody expected for this.
So far, especially the equity market hasn't cared at all about Brexit. But I do think, amazingly so, right? And you have bond volatility near an all-time low, not there, but so it seems like nobody cares. However, I think there is something that's called Brexit fatigue, that if they continue to delay these votes, at some point the market is going to care. So I'm keeping a really close eye on it, but fully realizing that things could change in just an instant. Yeah.
So Larry, this is basically, I was under the impression that a no hard Brexit was going to be risk positive, I guess, pound positive, but we have climbed from the lows pretty substantially for sterling. Does that mean then that we're sort of now waiting to kind of see what the market wants next, if they really want a, revote? I know that's been floated before, and I guess plenty of economists will tell you that's going to be a good thing if the EU stays together with England. But, do we know if that's what the market wants at this point?
Yeah, it's really hard to tell. I mean, and I think that's the whole thing about the market becoming fatigued. You have vols low, you have the pound has moved in a pretty broad volatile trading range, as it should, but I think this is getting old. This is getting to be old news, and old news after a while starts to become new news in the sense that no one seems to know what's good or what we're even fighting about. And so it's going to be very interesting to see how to trade around it and what transpires. But I do know the longer we wait, the longer we delay, even though we forget what we're fighting about, it's going to cause some dislocations in the market.
Yeah. Larry, all right, let's talk some bonds here, because speaking of fatigue, you've basically got a 10-year that has fallen asleep since December. We did have an auction earlier this week. Fair amount of bonds sold. There was pretty solid demand from what I understand. Non-dealers took down 79% of the deal. What's going on with bonds this week?
Well, this week so far, real rates are down. You have break-evens higher, and benchmarks are just middling as they watch the whole or wait for the FOMC. And I think that's what really matters. When you look at the numbers that have come out over the past couple of weeks, it definitely has caused yields to fall down to where they are today. Today, they've middled just a little bit because we saw the Bund up 1.5 basis points to a whopping 7.5 ticks. And the Japanese JGBs are still -5, but a little bit better than they were the night before.
Right. And so, Larry, we mentioned the 10-year auction. If we actually pull up in the control room the chart we've got of the 10, the 5, and the 30, what is starting to also make a trend is the 30-year yield remains quite more elevated than some of the other bonds on the shorter end. In fact, even the auction this week, I think also by most, I'm not the bond auction extraordinaire here, but I believe that you would characterize it as a little bit softer than the demand for the 10. I mean, just look at the tick up today. What's going on here? How come there's still, there's not as much eagerness to buy the longer dated bonds here?
Yeah, and that's the trillion-dollar question, and I think it's almost the way you're phrasing it, which I definitely understand what you're asking.
Okay.
And it is true. The 30-year, no, I would say it's all relative. I mean, I don't think the auction was actually weak. It just was. The 10 was so much stronger, the 5 was so much stronger, and I think the market's trying to figure out why that is, and it doesn't seem to be any good answers except for, hypothesis, which makes no sense whatsoever. Why there's so much demand for the 10, it's anybody's guess at this point.